Hello everybody, this is Toni Turner and welcome to the market now as of about 1:30 p.m. Eastern on Friday, March 16th. Well, the Dow and the S&P are ticking higher so far today as financial stocks track gains in yields following data that showed strong U.S. factory output and improving consumer sentiment. Economic data showed U.S. industrial production jumped 1.1% in February, and the University of Michigan's preliminary reading of Consumer Sentiment Index rose more than expected at 102. On that cheerful news, let's move on and look at three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. We watch the SPY because it closely follows our S&P 500 index, and we always want to keep an eye on the S&P 500 index because it's kind of the leader of the market. It kind of shows you where many stocks will go, at least during the time frame you're looking at. So we watch the SPY mainly because we can see volume on the SPY, which you can't see on an index itself because indexes themselves cannot be traded. So at any rate, we're looking back at this chart, daily chart of the SPY. On this chart, the red line is the 20-day moving average, the green line is the 50-day moving average, the black line is the 200-day moving average. Now, what's happened here, kind of interesting, we've worked ourselves, or the S&P has worked itself into quite a triangle here. We know that we had the all-time closing high on January 26th at $286.58. We know the SPY fell from there. On February 9th, it fell to a relative low down here at $252.92, stopping right on its 200-day moving average. It rallied from there, bounced back up to a high, moved back, and bounced back up to about 280, making a slightly higher high than this high, which is positive, but it couldn't stay there. So now when I captured this chart today, the SPY was trading at $274.73, or about $27.47 on the S&P 500 itself. Now, if we look at this triangle formation, there's a couple of things that we want to look at here. First of all, if we look at this bottom support line, this bottom trend line that I've drawn here, if we could see underneath these prices here, we'd see that this trend line is coming in at about 272, right around there. The top trend line is coming in at about 279. So this is the area this triangle is wandering around in. Triangles are pressure cookers. They're pushing price in closer and closer. As you can see, the pivots are getting closer and closer to each other. Now, with a triangle, we usually like them, especially if they're going to move higher, we like them to break out when they're about 2/3 of the way through. And sometimes they break down at that point. In this case, the triangle is continuing to form between these lines, and as you can see, the SPY, when I capture this chart, is sitting right on top of, at least at the moment, sitting right on top of the 50-day moving average. And that 50-day moving average is very important, and of course if we like our bull market, we'd like the SPY to stay above the 50-day moving average. So we're going to see how this triangle breaks out in the coming week. Of course, we've got the Fed announcement on Wednesday about 2 p.m., and that could be a very important announcement that could send this market one way higher or lower. We'll have to see. So we're going to have to see how this triangle formation breaks out. Can the SPY, can the S&P break out from here, move over 280 and move back toward this prior high up here at 286 and change? Or does it head south and the market take a breather? And we're only going to find that out in the coming weeks. So this is important. We're at an important place here. So stay tuned for more. Okay, as I've told you before in Tony's Market Club, we watch the IWM, the iShares Russell 2000 ETF. We watch it pretty frequently because it definitely can act as a leading indicator for the broader market. And the IWM right now is actually looking bullish, and that's a good thing. The IWM, the small cap ETF, is made up of companies valued at about $300 million to about $2 billion in market capitalization. And it often reacts to news and kind of moves faster than the broader market. It gets ahead of things, and it's really a drama queen too. Now, again, we know that the IWM made an all-time closing high right back here. Closing highs are important, at $159.96 on January 23rd. It made, excuse me, a high the next day, an intraday high that moved up past 160, but then, as you know, fell dramatically with the rest of the market. Now, we don't have the same triangle formation here that we have on the S&P 500. This one's actually a little more bullish. We still have a triangle, but this is a little more bullish, which is a good thing. And when I captured this chart today, the IWM is trading at $157.87. It rallied off of yesterday's low down here right about at 156.50. So, same question, different chart. In the coming week, can the IWM move up and move up past this $160 resistance line? Or does it need to move back toward the 50-day and the 20-day moving average? Now, if we look at the RSI here, the 14-day RSI, we see that it actually is right up the overbought line here is at 70 on the RSI. The RSI is just under that. So, but it's still pretty close to the overbought zone. So just wondering if the IWM can get the legs, can get the momentum to climb back up over this $160 line. So this is the other chart, of course, that we'll be watching very, very closely in the coming week. If it rallies up and moves past 160, that's a real nice signal for the market. If it needs to come down here a little bit, then we'll have to keep an eye on that as well. Our final chart for the day is a chart we haven't looked at in a really long time. This is the SPDR S&P Bank ETF, symbol KBE. The components in this are a little different than the standard SPDR, Select Sector SPDR financial ETF. The KBE top components are LendingTree, Voya, Co-America, Regions Financial. This ETF provides exposure to asset management and custody banks, diversified banks, regional banks, other diversified financial services, and thrifts and mortgage finance sub-industries. It is a modified equal weighted ETF that goes across large, mid, and small cap stocks. So equal weighted is good in a lot. Equal weighted ETFs are good in a lot of ways because they don't give any one particular company the giant share. Everybody is weighted equally, and they many times perform very, very nicely. So we're looking at this today. You can't see it here, but I wanted to tell you that KBE's all-time high, of course it was quite a while ago, was $60.40, and that was in February of 2007. Since then, and of course then it dropped. Okay, it was at 60.40. It dropped to a low of $8.90 in March of 2009. That was the bottom of the bear market. So it had a dramatic drop, as you can imagine. Being a banking stock, it would be in a financial meltdown. It's taken it all this time to come back up, and when I captured this chart today, the KBE was closing at $50.75, not closing, but trading at $50.75. So as you can see, it's trading in a very nice uptrend here. Here's our trend line coming in at just over 49. Walking up that trend line nicely, walking up for the most part the 50-day moving average. Now, in the coming week, again, as you know, we're going to have the FOMC meeting. They'll announce interest rates changes on Wednesday. If they do raise interest rates, if the Fed does raise interest rates, that is good for banks and financial organizations. That helps their profits. So I'm looking at the KBE here. I'm saying in the coming week, if it manages to stay above this 50-day moving average, the green line, the rising 50-day moving average, and if I buy shares here, I want to buy them relatively close to the green line. I don't want it to pop up and buy it way, way above the green line. So if this coming Monday, the KBE still looks strong and healthy, I may add a few shares to my be very small share size, because I want to mainly get through the FOMC meeting and see what their announcement is before I make a larger position on this. But at any rate, while it's still near the 50-day, I may buy some shares. I will buy very small share size, again, add to it after the Fed meeting if it is warranted, if price is moving higher. If at any time, as usual, the KBE rolls over and closes below the 50-day moving average, I will exit the trade. And now on to this coming week's economic reports. But first, please join us this coming Monday, March the 19th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is your low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session for all of our members. For more information and to join, go to tonismarketclub.com. For the coming week's economic reports, nothing much going on Monday and Tuesday. Wednesday, we have existing home sales, crude inventories, and again, that all-important FOMC rate decision, which will come out around 2 p.m. Eastern Time. On Thursday, we have our usual jobless claims and our usual natural gas inventories. On Friday, we have durable orders, new home sales, and the Michigan Sentiment Report. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.